Imagine this. You've worked hard for years and now it's time to enjoy your well-earned retirement. But how do you actually claim your UK state pension? If you're feeling lost in the process, don't worry. In this video, I'll break it down step by step so you can claim your pension smoothly and start enjoying your retirement stress-free. Hi everyone, welcome back to Money Made Simple. If you're new here, we simplify complex topics to make life easier for you. Today we're covering everything you need to know about claiming your UK state pension, so let's dive right in. Step 1, check your eligibility. Before you claim, you need to ensure you qualify. You must have reached state pension age, which is currently 66 but will gradually increase. You need at least 10 qualifying years of national insurance contributions to get some pension. To get the full state pension, you'll need 35 qualifying years. Not sure how many years you have? You can check your state pension forecast on the UK government website. I'll drop the link in the description. Step 2, decide how you want to claim. The UK government doesn't automatically pay your pension. You need to claim it. You can do this in 3 ways. By phone, call the pension service. Online, the fastest method through the official gov.uk website. By post, request a claim form and send it back. If you live abroad, the process might be slightly different, so check with the International Pension Centre. Step 3. When to claim. The earliest you can claim is 4 months before reaching state pension age. Once approved, payments usually start within 5 weeks. After that, you'll receive your pension every 4 weeks into your bank account. What if you don't claim immediately? Well, you can defer your pension, which could increase your payments later. But whether that's a good idea depends on your situation. Step 4. How much will you get? As of 2024, the full new state pension is £221.20 per week, or about £1,102 per year. But if you have fewer than 35 qualifying years, your amount will be lower. You may also get extra if you've paid more NI contributions or qualify for additional benefits. Step 5. Tax and additional benefits. Your state pension is taxable income, but you only pay tax if your total income, including private pensions or work, goes over the personal allowance, which is currently £125.70 per year. If your state pension is your only income, you likely won't pay tax. However, if you need more financial support, check if you qualify for pension credit, extra money for low-income retirees, housing benefit and council tax support, if you're renting, winter fuel payments to help with heating costs. Step 6. What if there's a problem? If your claim is delayed or rejected, don't panic. You can contact the pension service to check the status. Request a reconsideration if you believe there's a mistake. Appeal if you're not satisfied with the response. Also, if you've worked abroad, you might be eligible for a state pension from multiple countries. The UK has pension agreements with many nations, so be sure to check. And that's it. Claiming your UK state pension doesn't have to be complicated. Just remember, check your eligibility, claim online, by phone or by post, know how much you'll receive and whether you'll owe tax. Explore extra benefits if needed. If you found this helpful, give this video a thumbs up, subscribe for more finance and retirement tips, and drop a comment if you have any questions.